Boom! Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how the S&P 500, the poster child, the kingpin of the American stock market, has officially entered a bear market. Alright, so although this news should make one feel bearish, obviously, I want to let you guys know why I'm personally feeling more bullish than I have in quite a while, especially when it comes to growth stocks, and why I feel like the majority of stocks across the board are due for a nice short-term rally slash bounce. All right, so let's get into it, you guys. We'll quickly go over the topics I want to share with you, and then we'll dive into each one individually. To kick it off, we will read through the intro or the primary newsletter that I sent out on Friday. This summarizes the far majority of my current macro fundamental beliefs and really segues us into the primary argument I want to make today and what is really making me feel bullish from a psychological slash fundamental perspective on the markets right now, and that is the good old fear and greed index. Okay, so after we take a look at what the fear and greed index hit on Friday, very fearful, extremely fearful to be precise, we will take a look at the fear and greed index over the past year. And I want to show you what's happened when we get into these extremely fearful zones, at least from a historical perspective, and why it's probably good to be greedy when others are fearful. Whose quote is that? Okay, say it all the time, so you guys should know. Let me know in the comments, whose quote is that? All right, so after we take a look at the fear and greed index, again, primary argument I want to make today, and really speaks to the psychology of the retail Joe, of the average investor, and of hedge funds and whales as well, actually. And on the note of institutions, I want to take a look at the Dow Jones. The Dow just had its worst losing streak since 1923. That's almost a century ago. Almost made it to the 100-year anniversary, but we fell a year short, only hit the 99. But anyway, Dow saw its worst losing streak since 1923. We all know, especially here in the Wave Sam, especially here on the channel, that growth stocks, that hyper-growth sectors have been getting hit exceptionally hard for quite a while. But now that the S&P, the Dow, the NASDAQ, again, the three big equity indices in the U.S. equity markets have been seeing pain, the generals are being shot, as I've been saying, the kings are falling. And again, now your average Joe, now your pension funds, now your 401ks, now even your hedge funds with large, like your legacy funds, right? Big banks and stuff are beginning to feel the pain. And that's when, once again, the generals are shot. And that will make more sense kind of as we read through this and as I explain that a little further. Okay, to close out the video, we got to talk a little bit of technicals. I just want to talk to you guys about my bounce targets for the SPY, or S&P 500 Spider ETF, because once again, if the SPY does well, if the S&P 500 sees upside, it's very likely that the far majority of the stock market of growth stocks as well will see upside. And you guys know I pretty much primarily play growth stocks. So if the S&P 500 is up a percent or two, it's likely that growth stocks are up 4, 5, 6, even maybe 10% if you pick the right ones, which thankfully the Waves fam has been doing lately. Okay, so close it out with some S&P 500 bounce targets, how long I think this bounce may last and why, and we'll call it a day. All right, you guys, before we get to reading, please give the video a like if you do go on to gain value from it today. Subscribe to the channel if you're new around here, want to catch more content like this. You guys know it's easy to make money in a bull market, but if you want to stick around, if you're still standing in the wake of a bear market, if you're still learning, props to you, respect to you, and yeah, subscribe to the channel so you can hopefully keep learning from my successes as well as my failures. Okay, so that said, also once again, let me know down below, fearful when others are greedy, greedy when others are fearful, whose quote is that? Okay, boom. Anyway, it's Friday. S&P 500 has officially entered the elusive bear market. The tech-heavy NASDAQ has been in a bear market for quite some time now. And today, the poster child of the American equity market has finally earned the title. It's not a good title, but hey, it's a title nonetheless. The fear and greed index has reduced to 7, rivaling last Thursday's low of a 6. All of the top headlines on CNBC and Bloomberg are quotes from a bunch of economists and fund managers saying a recession seems more likely than not, and it just seems kind of comical. Like, thanks for the heads up, boys. You're all geniuses. And again, we'll go over, I wasn't even planning on including this, but it played perfectly into that. So move my fat head in a little bit and show you some of these, I mean, just genius analysts who are now predicting a recession 6 months into it. Okay, so regardless of these reputable individuals stating the obvious, they're still providing the negative headlines, and every average Joe out there is reading them and getting more and more scared. Tesla, the waves of the portfolios, biggest short position. I mean, those Tesla puts have been printing, you guys, is down a whopping 10% today. And although I'm stoked about it, personally, this is a frightening sight to the majority of retail investors, considering Tesla is so popular amongst the people. And again, on the note of hedge funds getting hurt as well, BlackRock, the largest fund, trillions of dollars under, not trillions, I mean, getting close to it probably. I don't know exactly BlackRock, largest fund. You can go look up their AUM, assets under management, but they hold a lot of Tesla. And the fact that Tesla's been getting smoked shows that even the biggest funds in the world are catching the smoke. Okay, so the point I'm trying to make is that the majority are still very scared. And investor sentiment is still very negative. But the bigger point that I want to make is that I believe we're much closer to a bottom than many people think. Most bear markets typically last about a year, or 359 days to be precise. I just read that in, that's just a statistic. That's just the average, okay? We're only a few months into this 2022 bear market, so statistically, more downside is ahead. That said, this market is more efficient than ever, and it moves faster than it ever has in the past when it comes to pricing in macro headwinds. I do think the economy could continue to struggle for quite a while, but I don't think the markets will struggle for much longer. I've said this a few times over the past couple of months, and I'll revisit it because I finally believe it's played out. The war isn't over until the generals are shot. The S&P 500 is the ultimate general, and it's finally been shot. The king has fallen. Of course, it's possible to see more downside, but at this point, the upside potential far outweighs the downside risk in my mind. This is, once again, why I use much of the profits from those Tesla puts to double down on my favorite growth stocks, which even as the course of the day, bought the dip midday Friday, and we all know the market ripped to close out the day on Friday. So that was awesome to actually close the day pretty significantly green in the portfolio. Be fearful when others are greedy, and greedy when others are fearful. If they aren't scared yet, I don't know what's going to scare them. And again, you guys, with the war, everything happening with Bitcoin, the collapse of Luna, again, just the markets falling, terrible earnings. There's not much else in terms of macroeconomic headwinds, or at least scare tactics, at least scary headlines, aside from these kind of just dated, honestly, at this point, these dated recession predictions. I mean, there's not much on the horizon that can get much more scary or initiate, I should say, instigate any more fear than is already present in the general investor base. Okay, at least that's kind of my theory on it. And I'm excited to see what the coming week has in store for the Waves fam. Have a great weekend, team. Hope you had a great weekend. I will be posting this on Sunday. So I hope you had a great weekend. I'm excited for the week ahead. And yeah, go check me out on IG because it's the birthday weekend. Tonight we are actually doing the gender reveal for our soon-to-be child. Guess what it is in the comments down below if you want to do that. So we'll be posting that. Follow me on IG, Royce Jacob. If not, all good, no worries. And if you guys do want to know how I will be personally navigating my personal portfolio, not only this week, but every week, literally every day, how I'm trading personally on a day-to-day basis, what's in the Waves portfolio, complete breakdown, call options, put options, stock positions, cryptocurrency positions, which is updated every trading day during market hours. Along with the update, I send out the complimentary newsletters. First is the Trade Alert newsletter. Next is going to be this newsletter, okay? This bad boy right here that we just read through. This is one of three. First, again, trade alerts, the most timely, then move on to this, kind of my macro fundamental thesis. And then part two, or the final third newsletter, is a bunch of charts, usually 4 or 5 charts that I feel are most relevant to that day, whether it comes to specific positions and price targets, and just rationalizing why I'm making the decisions I'm making. I did recently add this, and this will only be running, or will be running, I should say, till the end of May. So you'll have, like a week or so left, 7-day free trial. So if you guys want to dip your toes, I know times are hard for a lot of people. So if you guys want to try it out for free, if you like it, stick around. I trust you will. If not, no worries at all. Just don't stick around. You can always unsubscribe. But 7-day free trial, $50 a month. First link down in the description box below. Appreciate it if you check it out. I'm sure you will not be regretting your decision once you actually see what it's about. So again, first link down in the description box below. Thank you if you check it out. If not, appreciate you watching right now. Let's dive into the Fear and Greed Index. So once again, Fear and Greed on Friday saw a low of a 7. We did close out the day. Move my fat head up here real quick. So we did end up closing the day at what? Like a 13, okay. May 19th, B-Day was a 13. Okay, so we closed the week, or no, sorry, May 20th, we closed it out at a 12. So Friday, we saw a 12 on the fear and greed. Thursday, we saw, Wednesday, I should say, we saw a 10. And then last week, May 11th, or May 11th, last Thursday, when we saw that huge sell-off, we saw a 7, actually a low of a 6 that day, because I remember talking about it, okay? So, low of a 6. This is dating back, this fear and greed index is dating back only the past year. I wish it went back further, but the past year is enough for the example I'm trying to make. We're in extreme greed. Okay, right now we are in the state of extreme greed. Extreme greed, if we look at the fear and greed index, is anything below 25. 25 and up is just regular fear. Okay, so from 0 to 25 is extreme greed. What has happened in the past every time we're in areas of extreme greed? And it hasn't been as bad as it is now, which makes me even more bullish that we could see even more volatility. Again, volatility works both ways. If you fall hard, you're gonna bounce hard. Okay, so there's very few times in the past where we have seen fear and greed in the teens. Last time was in October, and you can see we did spend some time in the extremely fearful zone. But after the extreme fear, and again, not even at levels we're at now, after that extreme fear, we saw a very, very significant bounce. And this bounce actually lasted a while. Do I think this bounce is gonna last this long? No, because the economy is objectively getting worse. The consumer is running out of cash. Everything we've been talking about for the past few months now still holds strong, and it's actually getting exponentially worse with a potential credit bubble forming, and not going to get into the semantics of that. But there are definitely economic headwinds. But again, the stock market is a precursor to the economy itself. So usually the stock market front runs the economy. If the stock market's been falling, the economy will probably fall, 6 months to a year later, okay? And that's probably what's coming. So I don't think we will see a bull run reinitiate itself in the equity markets from a medium to longer term perspective. Once again, because we are in an area of extreme greed, I do think we will at least reclaim standard fear, which again is 25. And I do think that this could line up pretty well with our I'll call it a medium term price target, because my target for the S&P is actually almost exactly a month out, okay? So exactly a month out, and I do think that over the course of this month, the fear and greed index, we will make our way back up from extreme fear to just regular fear, because again, you guys, the extremely fearful, headwinds, I should say, or once again, fear instigators that would make one extremely fearful, I believe are behind us. I can't imagine what would happen next, but it does make sense just to be kind of paranoid and regularly fearful. Okay, so before we get into the charts, let's cover this quick. Once again, the Dow Jones Industrial Average fell 2.9% for the week, marking its 8th consecutive weekly decline. That's the Dow's first 8-week slide since 1923. The S&P 500 and NASDAQ Composite fell for a 7th straight week, losing 3.1% and 3.8% respectively. So, again, you guys, worst in, we'll call it a century, worst losing streak for the Dow since, in the century, since the freaking World War, since the First World War, pretty much. So, I mean, you guys, times are rough. And again, just to kind of reinforce the levels of fear that we're seeing in the market, this first one's good. And keep in mind, you guys, this is just some of the pro articles, the CNBC pro articles. You can only imagine what's been on just the headlines, right? So Jeremy Grantham said today's bubble is worse than 2000. Calls stocks to at least double their losses. Stocks keep hitting new lows. Here's how to protect your portfolio. Deutsche Bank, good old Deutsche, cuts baseline market forecast and sees S&P 500 at 3,000 if there's a recession. The Fed doesn't care about your stock portfolio, at least until inflation calms down. And again, you guys, this has just been the flurry. Terrible earnings, which caused last Thursday's market meltdown, the fear and greed down to a 6. It's staggering. So, again, you guys, the point I'm trying to make, you got to play the game theoretical aspect of the markets. That's especially important when there's so much emotion involved. You have to play the game theory. And right now, and again, just looking at what's happened when we're in areas of extreme fear in the past, I'm not saying we can't see more downside. We're not saying that we won't see more downside. I do think later in the summer, another wave to the downside is very likely and possible. But short term, again, extreme fear will dissipate, and I do think we will reclaim kind of normal levels of standard fear. And once again, I do think we can reach those normal levels of fear within the next month. because I do think the S&P 500, we are on 4-hour candles. You can see the SPY is about to curl up on the stochastic RSI, or the stochastic RSI on the SPY is about to curl up, I should say. Good old blue over red to the upside. That's usually a good sign when it comes to short to medium term price action on the 4-hour. And I do think that we can, again, especially seeing that perfect bounce on Friday, you can see this overall line of support on the S&P's downtrend, like since its all-time highs at the beginning of this year. Overall support, you can see boom, touch point here, creating that line of support that every trader and their mom is looking at. Perfect bounce off that support on Friday, super hard bounce at that. And I do think it makes sense that we could come up to test the line of resistance on its current downtrend as well. Touch point here, late March, another touch point right here, creating that line of resistance. I do think we could come up, bounce to this level around 415. The reason for that also is because that's the SPY's previous low over here. We could say it's down here, but I'll just call it right there because we got more than one touch point. Didn't even close below that, actually, that one 4-hour candle. So I would consider this to be like on the stair step down from the SPY's all-time high, the previous low on the medium-term downtrend. This perfectly coincides with the shorter-term line of resistance, which is this yellow line. Again, support over here, previous ceiling, new previous floor, new ceiling, current line of resistance on that downtrend. Those intersect on June 23rd. So once again, just over a month out from now, just about a month out from now, and those would intersect at about $415, or representing a 7% move to the upside from here. Again, that isn't much, but again, you guys, I'm not saying this environment is bullish. I don't think we should bounce back in a very significant way, but I do think the SPY can start crawling back, just as, again, not as optimism returns, but as extreme pessimism fades. Okay, so again, the SPY's looking good. SPY's up a couple percent. Our favorite growth stocks are up 5-10%. And once again, thankfully, the portfolio has been performing. These past couple of weeks have been insane for the portfolio, you guys. If you've been trading with me, if you have been getting into similar positions, again, never copy me. I don't want you to copy me directly, but if you agree with the sentiment, if you agree with my analyses, feel free to establish positions for yourself. That's always your decision. But again, you guys, the past couple weeks have been great. If you guys have been on board with me, if you guys have been making money, if you guys have been eating well, steak and sushi, wagyu and sushi, let me know in the comments down below. Really appreciate you guys. I mean, honestly, just celebrate with you guys. But if you guys want to join the fam, if you guys want to level up your game, and let the numbers speak for themselves, 7-day free trial. Give it a shot. First link down in the description box below. And we'll call it there, you guys. I'll catch you guys downstairs in the comments down below as well. Until next time, always remember, take action, make waves. Peace.